Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me to discuss what retail investors are most concerned about ahead of the elections and what it's like to be a financial advisor in this new era is Chris Englebert, founding partner and CIO of Englebert Financial Advisors. Chris, as always, it's great to see you. Welcome back to Trade Talks.
Thank you, Jill. It's great to be here. And here we are, September coming to a close.
I cannot believe that September is coming to a close. The third quarter of 2020 is coming to a close. We're going into a national election. It's just like 2020 is the year that keeps on giving. And with that said, what are the top three things investors are concerned about?
Yeah, well, the top three things are obviously there's been heavy news flow on some of the states having a resurgence for COVID and possible, the economy shutting down again. We really don't think that's going to happen, but it's on everybody's mind. The second thing that everybody's worried about is obviously the nightly news has all the urban riots going on. And the question is whether or not that's going to, spread to the suburbs or even the rural areas. We don't think that's going to happen either, but it's again on top of everybody's mind. And then obviously the third thing that people are very concerned about is obviously the elections and what's going on there. The news flow has been heavy. Whether one candidate or the other is leading in a state or what's happening. It's really a lot of news flow, and it's a lot of, I literally am getting a call, one or two calls a day from clients going, hey, what are we doing? How should we change what's going on? And one of the reoccurring themes I keep telling them, and our viewers should really do, is I say it's very difficult to get bearish right now, because if you go to the St. Louis Federal Reserve website, Google St. Louis Federal Reserve, and in the upper right-hand corner under the search bar, put M2 money supply and look at that chart. We are seeing a tremendous amount of liquidity. People don't really know what they want to do. I mean, corporations are worried about obviously another shutdown, but individuals are keeping record amounts of cash. So I have clients coming back to me and they're pleasantly surprised, that their accounts are back up, but everybody wants to sit on the sidelines and not do anything. And one of the things we've been telling people is that, by the time you make a decision based upon the election, it may be too late, as far as that opportunity goes.
Yeah, Chris, I would agree with you there. I think the volatility that we're seeing in the market, and certainly the futures are pricing in that this is going to extend beyond the November expiration. I think there's something there for short-term traders. Of course, our audience and your clients are longer term. But I think there's something in there for everyone. You have the short-term opportunities if that's, your style, but longer term, you might have a great opportunity to either pick up stuff at a discount or, once you look at this, maybe let's say 10 years from now, if we look at the financial crisis from 10 years before, right? Everyone thought that was the end of the world and they were trying to move to cash, but look at where their accounts are now. So I think it makes sense to, take it a little bit more in stride. I think there's a lot of overreaction here just because it's so new and it's in the news cycle. So my question to you is, what's it like being a financial advisor in this environment?
Yeah, I mean, the last 6 months obviously have been extremely interesting for everybody, but running our practice, we've been here every day. We've been in our office every day. We're a small office, so we don't really have to worry about anything. But what it's done is it's made us a lot more efficient. And what I mean by that is, we always scheduled client meetings and client calls, but I'm fascinated by how quickly clients are really stepping up and understanding the new environment. So, before where I'd casually call a client out of the blue, now we reach out to them via email and say, hey, listen, 10 o'clock on Monday, let's do a quick 20-minute call and review your account. And they're much more focused on that. The other thing that people are getting used to is the technology, the Zoom calls. We are doing many more Zoom calls. It's funny because our older clients actually like the Zoom calls a lot more. We just had one yesterday afternoon. The husband and wife in two separate rooms on their laptops got on, and it was a really good conversation. And then I think what's also very interesting is we're still doing in-person meetings. So Wednesday night we had a client come in and sit down, and he had said to his wife, he said, well, I'm going to go see Chris and do my review. And the wife was like, really? You're going there in person? And his comeback was, honey, I got to get out of the house. And so he came and, we had a really good meeting. But I think what's very fascinating and actually good is that people are listening more and paying more attention. I mean, whether you're doing, a telephone call or Zoom call or in person, people are much more focused right now. And I think that's the difference. I mean, not that they weren't focused about, their investments before, but, the whole lockdown and the whole COVID situation has really gotten people to say, hey, listen, what's my strategy? What am I doing? How are you handling our accounts, et cetera? And I think it's good. I think it'll be one of the positive things to come out of this in the long run.
Yeah, and of course, it makes everyone more efficient as well. Like when you used to come into Market Site in Times Square, it would take you, I don't know, 2 hours to get in, and you
Yeah.
in studio, then 2 hours to get back. You're getting back half of your day so that you can focus on this with your clients. And with that said, let's do our chart review, and we'll take a look at the S&P 500, because certainly September is a very different conversation than what we had in August.
Yeah, I think it's ironic that August was one of the best months in the S&P 500, literally in 36 years. The market was up 7%. Everybody was like, hey, we're waiting for a pullback to get in. Guess what? We've gotten our pullback. We're down 10% from the highs. And that's a normal, this is obviously the first correction we've had since the first big correction in February and March. And everybody's like saying, hey, this is the big one. This is the big one. We don't think it is. We think this is a normal pullback. And one of your comments about volatility, I was looking at some rather interesting statistics that we have had 29 days this year of movements of 1% on the upside in the S&P 500. And we've also had over 20 moves on the downside of 1%, the most since 2009. So, again, volatility can be bad, but, in many cases, volatility we think is actually good.
Agreed. Let's take a look at the Nasdaq 100.
Yeah, Nasdaq's another one. I mean, it's been a beast this year. Obviously, the work from home trade has been huge. And again, people are like, hey, we'd love to see a pullback to get in. We've had a 15% pullback from highs to low. And when it was happening last week, I got my shopping list out and we went through some of the names that we really like. The cash to plastic play we think is still, solidly ingrained out there. There's also the edge of the cloud. There's been some of those stocks that have done a big IPO last week. We still think that's a really good investment place to be. So again, people, this is the only business, and you've been around a long time like I have, where when things go on sale, if it's a store or online shopping, people want to buy. But when things go on sale in the stock market, people run when it's like, hey, now it's on sale. Now we should be stepping up and getting our position if we're underinvested.
Let's take a look at the small caps with the Russell 2000. I feel like, it's just been lacking in participation for quite some time.
Yeah, this has been a head scratcher literally the last 2 years. I mean, they've been laggards on the upside. They've been the first to sell off on the downside. I really think we've got to get beyond what's happening in the economy. We need more clarity, because a lot of these companies, they got hurt at the beginning of the year because they couldn't pivot as quickly as some of the bigger companies. And now people are saying, well, gee, how's the economy going to be looking in 2021? At some point, they're going to be attractive, but they're just not attractive yet.
How about the 10-year Treasury? Anything new there?
No, it's really been flattened out. I mean, whether you think there's going to be an economic recovery next year, which we do think there will be, we would think rates would be doing better than they are. But interest rates definitely look like they're going to be lower for longer at this point in time.
And finally, let's wrap up with oil. It's been really tough in the energy patch.
Yeah, and you know what? You saw that this week. Interestingly enough, oil sold off at the beginning of September. It recovered. There's a lot of value out there in value stocks. You and I have talked about this on other segments, but again, this last week in the yield companies, the utilities, the banks, and the energy, they've all sold off one more time as people chase the large cap growth trade. So we don't know when that turn is going to come. It keeps getting attractive. I talked to a fund manager who specializes in utility companies last week, and he's been doing it for a long time. He made the comment that he's never seen utilities this cheap, and that there's got to be obviously some value there at some point. So it's one of those things where you need to really start positioning your portfolio now for the recovery in 2021.
All right, Chris, great to have you with us as always. Thanks for joining us on Trade Talks.
Thank you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.